traders, welcome back. Welcome to Forex Mechanics. Today I thought of making a video and discussing about which market is really better. Is trading Forex better or is trading stocks better? Now this video is basically about my own personal experience that I've had. So I will be discussing about that in this video. And towards the end of the video, I will also be sharing, I won't really call it a strategy, but it is more like an idea that I use myself for my personal trading as far as Forex is concerned. And at the same time, I'll share something with you which I personally use uh, as far as investing in stocks is concerned. So wait till the end of the video because I will be sharing something which I personally use and I'm sure it may help you. So it's a way in which I combine some technical information in order to invest in the stock market, right? So let's begin. So Forex versus stock. Now, as I told you in the earlier video that, in this video, it's about my personal experience and why I choose a specific market in order to trade and what is the reason behind it. So for me personally, I've been trading Forex since many years now. And the reason I like Forex is simply because it is the largest market. The kind of liquidity that you have in the Forex market is not available in any other market. So the reason I trade in Forex is simply because of the liquidity and the kind of profits that you can make on a daily basis, right? And for any aspiring Forex traders out there, I would just want to tell you one thing that you may have heard, like, Forex trading does have a bad name. Like, people do say that, people blow up account, they blow up accounts, they lose money, so on and so forth. But that is simply because most of the Forex traders have not really followed some key concepts that they need to follow when they are trading Forex. Now, when I say most of the traders, even I have been a part of it. When I started Forex, even I've made a lot of mistakes. But when it came to Forex trading, the day I learned about currency strength and weakness, when I started using money management, when I put together a good strategy with currency strength and weakness, which I always talk about in my channel, you can refer to my older videos. Once I mastered that skill, it became easier for me to trade in Forex. So Forex becomes like a market where I can trade and you can make consistent returns on a daily basis, weekly basis, monthly basis, right? So as far as I'm concerned, I like to trade in Forex because of the liquidity. Now, for me, when I look at the stock market, I am looking at it personally from a very long-term perspective. Not that I've not traded in stocks, but it is just that I like or I love to trade Forex compared to stocks. And as I told you in the previous slide, that I like it simply because it is more liquid compared to stocks. Now, as far as stock market is concerned, I am always looking at some good quality stocks, like typically what we call blue chip companies. And my personal way to invest is I also like to invest in index mutual funds. Right. So every country, I'm sure, I'm not sure which country you are located in, but I am in India. So in India, we have just like how you have the S&P 500 or the Nasdaq in US, we have something called as the Sensex and the Nifty, which are basically index. So we have index funds which are tied to these index mutual funds which are tied to Sensex and Nifty, just like how you have index funds in US or any other country. And I have my regular investments that go in every month. And that's how I like to be invested in stocks. So personally, I don't like to invest or rather trade in stocks, especially day trading or intraday or anything of that sort, simply because of the lack of liquidity. And one more thing is that the kind of money you would need in stocks is much higher. I mean, for me, I can with the right amount of leverage in Forex and with the right strategy, I can control a much bigger lot size with a smaller amount. Obviously, I'm not advocating high leverage. That's the reason why I mentioned that with a good leverage and a good strategy, forex markets becomes a better way to trade. So I don't really trade in stocks, because one more thing is that, there are a lot of things when you're talking about a stock, then there are a lot of things that you need to look at, especially there are thousands of stocks in the market. So, you'll have to analyze the company, you'll have to do a lot of other things as far as trading in stocks is concerned. Even if I have to look at, buying a stock for a month or two, I don't really prefer, because you could call it a mindset. It is just that I feel trading in forex is much more simpler than than in stocks. So when you talk about the stock market, for me, I personally like to keep it as an investment, or you could call it more of a wealth creation from a long-term perspective. So that is the route that I take when, as far as stocks are concerned. Now, when I speak about stocks, like I told you, towards the end of the video, I will be sharing an information, something that I would like to share with you, because I use this technique to accumulate in my stock portfolio. So I will give you that little tip that I use towards the end of the video. So hang in there. Right now, if you talk about if you are a trader, if you're a fundamental trader, you like to do analysis of companies, the earnings, the finances, you track various sectors performance, then obviously stocks is the market for you. As far as I'm concerned, as far as my stock investing is concerned, what I am mostly looking at is the overall picture. So I'm not really looking at individual companies or sectors. I'm looking at global indexes, for example S&P 500, because here in India, sitting here in India, and because I'm investing in stocks, and because I'm buying, from a very, very long-term perspective, it is very important for me to track the S&P 500. So for me, I am mostly looking at what is happening across the globe from a macro perspective. So I'm looking at S&P, I will look at oil, I will look at the overall inflation, I will look at what is happening globally, just to have a fair understanding, so that I know where my portfolio is heading. And whenever I'm looking at corrections, like what we're having right now is a correction. We all know what is happening in the stock market right now. So these are opportunities where I will look for accumulating my existing good company stocks, or to simply top up, or put a higher amount. Whenever I see deep corrections, I'll just keep buying into my same mutual fund. That's what I would. That is the approach I take. Okay, so I personally trade forex because of the liquidity, and forex is a better market. And I look at stocks purely as an investment. So obviously that decision is up to you. Which one would you like to choose? One more thing about forex is, like it's mentioned, uh, account opening is fairly simple, and the leverage is good. Most important thing about forex is that even with a small account, you can start trading. Right now, when I say you can start trading with a small account, it simply means that if you have the right strategy, then a small account is enough for you to gradually keep growing it. You can trade daily, depending on your lifestyle, because it's a 24/7 market. You can based on your strategy, you will have some way to trade. Like maybe you're looking at an Asian session, maybe you're looking at a UK session or a US session, but there is something in it for everyone. So if you could somehow get the right strategy in place, then obviously trading forex is much more simpler. This is what I personally feel. Maybe I feel so is because I've been trading forex for many years, so I like to trade forex. But because it is easier to open an account, and you can do it with a small account, that's the reason why, even if you are a new trader, it is easy for you to get into the forex market. As far as daily trading, especially if you are looking at technical analysis and technical trading, then forex becomes an easier route compared to stocks. Right now, again, like I mentioned, that it all comes down to your personal choice and what is it that you're looking for. Because if you're looking at trading stocks, then obviously it's your personal choice. But when you're trading stocks, you're obviously, especially when you're buying and selling stocks, the amount of money you would need is much more compared to the forex market. Right? So for me, I like to trade the forex market and not the stock market. Now, coming to the point that I mentioned, that what is it that I really follow as far as stocks are concerned. Before I tell you this, I would like to tell you that I am based in India. So all my stocks investments are in the Indian companies. So I'm looking at blue chip Indian companies, but then it doesn't really matter because we all know that as far as the stock market is concerned, it is very important for you as a stock market investor, especially as an investor, that you are well aware of what is happening. At least you should be aware of the macroeconomics in terms of what is happening globally. Now, typically it would be something like, the price of oil. We all know what is happening in Ukraine, Russia. So all these things will affect the global stock market. Now, when I'm looking at my stock investments, the first thing I'm always tracking on a very regular basis is the S&P 500. The reason I do it is because we all know that it is the US stock market. So anything that is happening in the US, it is going to have the effect is going to come into your domestic market. So here in India, uh, I very well know that whenever there is a deep correction or whenever there is a rally or anything that happens in the US, the effect is going to happen in India as well. So for me, because I'm looking at a long-term horizon and I'm buying good company Indian stocks, and at the same time I'm investing in some in an index mutual fund. I'm also invested in some other mutual funds, but then primarily the index mutual fund. It is very important for me to know what is happening in the S&P 500. Now, what I have is I have like my regular SIP, which is SIP is a systematic investment plan where you have a certain amount that goes into the mutual fund every month, right? So obviously I have my mutual funds running, but I'm always looking for those periods of correction where I could make some lump sum investment into my mutual funds and into my existing stocks. So I will show you what I do. Now, here what you're looking at is an S&P 500. This is the weekly chart, right? I'm looking at the MetaTrader itself, and all I'm looking for is corrections, right? So if you look at this is the entire S&P chart, and I'm looking at a chart from 2013, and you can see it's always been, if you look at the long-term perspective, if it's been a bull run. But for me, I'm also looking at those times when there is a deep correction, right? Or wherever there is a correction in the S&P 500, I know that that correction is going to come in the Indian market as well. So if I show you what happened today, so I'll show you what happened today. Now this is the S&P 500, and we can see that obviously the stock market has been falling since the start of the year. And here you can see that there has been a sharp correction on the S&P 500. Right now, I'm not looking at trading anything, but for me, because I know that there is a correction in the S&P 500, I am going to buy more of my stocks. So what I do is that I just ensure that whatever stocks I'm holding, if I'm getting my same company stocks at a better price, I will simply buy it. Same thing when it goes for my mutual funds. So here what I've done is I have the William percentage indicator here, right? Now, because I have my mutual fund running, which is obviously taking positions every month, a small portion goes every month into my mutual funds. But in order to make sure that I average out and in order to get a little better return, what I do is I simply look at the William percentage, and here I'm looking at the S&P 500. So every time I look at deep correction, so this was back in 2020, we all know what happened. This was during COVID, and obviously this was an opportunity for you to start accumulating. So whenever I see that there is a drop, or whenever I see William going into an oversold situation, right, I keep buying small portions of my existing mutual funds. And again, it depends. If I'm getting my existing stock at a cheaper price, then I will look at it. But I use this predominantly for my mutual funds because that is where major of my money is. So I am looking at, I keep buying into my mutual funds every time I see a correction, right? And whenever I see a correction on the weekly time frame. So whenever I'm looking at the weekly time frame, so here you can see, if you see back in 2014, 15. So time and again, whenever I have seen some major correction, this is in 2018, this is 2020. So now again, you can see today, right today, you can see how it is dropped into this oversold area. Now, the fact that it went into the oversold area earlier this year as well, and then we had some deep correction. So now here is another time where I will accumulate into my mutual fund. So I know that today is a Friday, right? So for me, I know that this is a Friday and the Indian stock market today is currently closed. But we can all see what is happening in the S&P 500. So there has been a massive sell-off. In fact, the sell-off is still going on, and you can see that there is a sell-off going on in the S&P. But I can see that there is a correction that is happening. So what is going to happen if you look at the Sensex today? Let me just show it to you. If you look at the Sensex today, this is the Sensex. This is the Indian stock market. Now, what I'm looking at is a 1.84% correction that happened today, right? But I also know that the markets have closed, and this is what is happening right now in US. This is a Friday. So I know the effect of this fall will come on Monday in the Indian stock market. So for me, the fact that I'm looking at this William at an oversold area, on the weekly time frame, it is giving me a hint that this is a good time for me to accumulate. So every time I see these major dips, I go and accumulate in a bigger chunk into my existing mutual funds, right? So if you look at this year, I had, so you can see Jan 2020, you had 2018, 2016. Now it all depends on what kind of funds are available to you, and I always ensure that I have money which is kept aside for situations like these, which will help me average out my overall portfolio. Now today that I can see that the market is already gone into an oversold territory, and I'm assuming that this is going to continue like this for the days to come because of the overall macro situation that is going on right now. But we all know that nobody can really time the market. The idea that I have is that I just want to stay invested and I want to keep accumulating every time I see some deep corrections in the market. So this is my first, so this technically in this year, this is another opportunity where I would go and buy some more mutual funds. So on Monday evening or maybe on Tuesday morning, I will go and do a lump sum investment into my existing mutual funds. So what this does is this helps me accumulate over a period of time. So obviously my systematic investment plans are running every month, so there is a certain amount which is getting accumulated every month. But the fact that there is this deep correction happening, so whenever I see these corrections happening, and whenever I see, in this case, when it is getting oversold, I look for buying into my existing mutual fund. Now this is something that I've been using since a very long time, and this is helpful. So I'm not sure how helpful this will be for you, but I really thought of sharing this information with you that irrespective of wherever you are, tracking the S&P 500 is very important, especially if you're looking at long-term wealth creation, and especially if you are a trader who is in India, then tracking S&P 500 is more important because once you track S&P 500 is when you have enough information available of what is going to happen globally, right? So as I told you, today the S&P is falling, so I know that I'm going to see this effect on Monday, and I'm expecting a major correction on Monday. And if I see that major correction happening on Monday, then that would give me an opportunity to buy into my existing mutual fund. Just buy a small chunk and ensure that I keep buying. Right. So that's how I use, to keep it to stay invested in the stock market. And as far as my personal forex trading is concerned, I'm sure by now all of you know that I'm a big believer of currency strength and weakness, and I feel that's the only way you can trade the currency market. So as far as my forex trading is concerned, I use the currency strength meter, and obviously I have a strategy which is designed for which helps me to take trades on a daily basis. So forex trading is what I use for trading daily, for daily profits, weekly profits, or you could put it this way that forex trading is for it's more like daily expense, and stock investments is more like wealth creation, right? So I hope you enjoyed this video. Ultimately, it is your personal choice, whichever way you want to go. Personally, I like to day trade in forex and stay invested for a very, very long term in the stock market. I'll see you in the next video. Have a good day. Bye bye.